Hey traders, Raghee here, and in this recap video I'd like to go over the NASDAQ relative performance with you. Now, if you recall, yesterday we did the same process in the Dow, whereby we took a look at the main average, the main broader average in the NQ futures, cracked open the NQ futures, took a look at what's inside, and we know that what we have are to varying degrees different weighted names that are going to dictate by and large what the NASDAQ is going to do. Now, whether you're looking at the QQQ ETF, whether you're looking at NQ, this is the way in which I'll break that down, ETF or futures. So what I do is I list these in order. This is the multi-chart layout that I use, and in here we have the trending trade flags. This is what we call the JT trend. It's the way in which the 8, 13, and 21 are organized. These are popular settings for EMAs, and they're also the same settings I used for the simpler propulsion dots that I use in lieu of the actual EMAs and in lieu of using moving average cross. This does both simultaneously. We make this available free to members. So I've got that running. Those are all these dots. And then the free trade flags that give you the organization of those moving averages, as well as the expectation of what the wave is doing right now and what it could continue to do. That's where the expectation is. It's bullish, it'll continue bullish. It's sideways, it'll continue sideways until something changes. All right, so once I can assess everything, all the heavily weighted names, I can also consider the sectors. Of course, that would be looking at the QQQ ETF. In other words, I'll take the sectors and I'll break them down to their coordinating ETFs, so QQQ, XLC, and XLY. So I can look at them from a sector standpoint as well. And then also, just so you can see what I have here, I'll also break those down. Do you see I have an XLC multi-chart, meaning XLC will be in the upper left-hand corner, and then all the heavily weighted names within the XLC will be listed like we have here on the NASDAQ. So very similar approach. So what are the names that I want to focus on within the heavily weighted stocks, and what is setting up right now? We had a breakout. We had a momentum breakout in Amazon that we have been talking about for some time, and that triggered as the market broke through basically 1650 to 1655 and followed through for a good 50 points to 1700 and just beyond that. So that was a nice little momentum breakout, what we call a breakout from the consolidation, aka basically a squeeze, which is the flagship indicator for Simpler. The way that I will set up a squeeze, however, is in a sideways market, and I'll identify a sideways market based upon the blue graph candles, and I have a bullish take on this because the trend that preceded this was up, so I'm going to look for a continuation after the consolidation. So that was a nice trade that we had, but it's pulling back. This is not going to be a buy for me quite yet. Not at all. What is a little bit more interesting for a buy is Netflix coming off a bounce of the wave in here. We haven't left the proximity of the wave too badly, but this is what I'm talking about in here. That's going to be more of a trigger. We will not buy it from the top of the range. We want to buy it from the lower part of the range, right? And that's what that is right there. So Netflix is in or just trying to leave that correction zone. What else are we looking at? I think NVIDIA could be potentially a momentum breakout. It's a little too soon, but the wave is starting to flatten. And if we continue to get more blue grab candles, and if we continue to see this narrow range, what we will wait for is a potential breakdown scenario. And that would be the squeeze breaking, or what I call a Momo entry, a good tactical Momo entry. And what else is pulling back? What I'm looking for are markets that are not at the top of their range. Apple is not quite at a level that I would get in at yet, but I think that there's the opportunity to look a little bit more aggressively, say because of this Darvas level in this area, okay, right around 173, and then I'd also like to look at the top line of the wave around 171. So pullbacks, this would be aggressive, this would be more conservative. By the way, this would be the least conservative, down here around 163, 168 and a half. That would be even better. So you'll notice when I set up trades, those of you that are members watching this video, we typically have 3 levels, an aggressive, a moderate, and a conservative, and then the stop loss. Every one of these are valid for an entry. We know that the last one is going to have the best risk to reward The closer we are to our eventual stop loss, the better the risk reward. So think about that when you're choosing which one of these that you want to enter from. Okay, but that's what's on my radar for right now when I look at the relative performance breakdown in the NASDAQ. Hope that helps. We'll do this for ETFs and other markets soon. You can even do this for currencies. We can do this with crude oil and energy stocks. There's a lot of ways you can break this down. So it's a very repetitive process that works. I'll see you in the next update.